Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I want to get to this economic data. ISM Manufacturing data came out. We're looking at 50.3. The consensus was 50.7, so a little bit weaker there. New orders, kind of interesting. Consensus was 54.6, came at 48.6, so a big miss there. Tim Fiore joins us, chairman of the Manufacturing Business Survey for the Institute for Supply Management. Tim, what do you make of this ISM data coming out here on our manufacturing buddies?
Well, hi, Paul. Hi, Alix. So, hey, I think the real story here, let's get right to it, is the prices number at 62.4. We're up 7.5 points. And, you know, in December and January, we had some price growth too. But we really were putting our prices in for the 2025 economic year, for the delivery year. So there's really no reason for this number to go up so high, except for the fact that as soon as tariffs were announced on aluminum and steel, the spot market immediately jumped up 20%. Now our 62.4 number is a measurement really of how wide the lake is, not how deep it is. So what this is really saying is a lot of companies were impacted by the steel and aluminum increase that was almost immediate. And it had a carryover factor, I think, on what's happening in new order level, because it's essentially frozen people from placing orders because suppliers and sellers are arguing amongst themselves about who's going to pay for this. Then on top of that, the inventory number grew, in part because of the Chinese Lunar New Year materials being delivered, but also because people were pulling forward material in anticipation of tariffs. And then your supplier delivery number went up too, in part because suppliers may be refusing to deliver until customers agree to pay the increased cost. So, you know, overall, this is the 50.3 looks pretty good, but the guts of this doesn't look pretty good.
Yeah.
If you had a stable input number, this number would have been in the 48 range.
So, wow. Okay. Also, the employment number dipped significantly as well. I felt like the narrative before was that we weren't seeing layoffs, but we weren't seeing hiring. Has that now changed?
No, you're exactly right. We're continuing on the same cycle that we've been for the last 3 or 4 months. I think what's happening here is, in the absence of some confidence that we're going to start to grow here and not have a burp, you know, this does not support another rate cut. I think what's happening is people are continuing to release people, but they're not doing it so much, Alix, this time on layoffs. It's more about attrition and freezes. So they're not overreacting here, but they are deciding that, well, let's continue to de-staff here slightly, but we're not going to use a layoff activity. We're just going to freeze and we're going to attrit down a little bit until the environment becomes clearer.
All right, Tim, thanks so much for joining us. Really appreciate it. Tim Fiore, he's the chairman of the Manufacturing Business Survey at the Institute for Supply Management. Smart kids call it ISM. This may be, I guess, kind of one of the first concrete data points that we'll point back to is about the potential impact of some of these tariff discussions on actual manufacturing activity. So we'll keep that in mind.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Josh Wingrove is joining us, Bloomberg senior White House reporter. He joins us now on the White House lawn. Hey, Josh, good to chat with you. We're clearly waiting for these tariffs to be put into effect tomorrow. My question, though, is how sensitive do you think the administration currently is to the market, which is saying something a little different than maybe we were expecting, say, 4 months ago?
Yeah, I think that is seen as the sort of one true guardrail that President Trump pays attention to. Now, that said, many of his aides have been saying, look, like in the first term, we did a lot of tariffs and things didn't really, go sideways. Although, independent analysts will tell you there was a lot of sort of weakness periodically on the underbelly of the economy in the first term. The big question right now is this all a bluff? And remember, this is only one stream of tariffs. And if you've been having trouble keeping the plot, not that any of us have, obviously, but it would be understandable because you've got these ones. You've got ones next week on steel and aluminum, which, by the way, would hit Canada and Mexico pretty hard, regardless of whether there's another delay tonight or not. And then, of course, in April, you have not only the sectoral tariffs on autos, maybe lumber, maybe chips, maybe pharmaceutical drugs, all of which could hit Canada and or Mexico pretty hard. And those other tariffs, those so-called reciprocal tariffs that would be on a country-by-country basis, including, of course, maybe Canada, Mexico, and China on top of whatever does or does not happen tonight. So things are coming down multiple paths. And there's going to be a lot of focus, of course, tonight on whether these go in or not. It's, a bit unusual that we're sitting here and we don't know. A month ago, we were in the same position of what happened. There were calls between President Trump and President Sheinbaum in Mexico and Prime Minister Trudeau in Canada, who only has a few days left or so as Prime Minister. We don't know right now whether those calls are on tap. That would be one thing to look for today as a signal of whether there'll be another deferral. Remember, of course, the China tariffs also could be doubled from 10 to 20% today. No real sign of any indication that would be put off. So, these things could all move independently. It's maybe not all three or none.
Josh, we're going to hear from President Trump addressing the joint session of Congress tomorrow evening. Any preview there? What's kind of the agenda?
I mean, he wants to take a victory lap. He wants to talk about the things that they've done in the first month. I think we're going to talk about the border. That is context for the tariffs, and really it's kind of an eye of the beholder thing on how you choose to read that. He's been, tweeting or posting about border numbers coming way down. Of course, the border is the justification for some of these tariffs. So, he'll either be there to say, look, I just dropped tariffs on $1.5 trillion in goods, and, here we are, and we're into a trade fight now. Or he can declare victory on the border. Maybe that gives him a window to defer at least some of these tariffs. But other than that, I think we'll hear a lot about the border. We're going to hear a lot about, of course, America First messaging. The backdrop of that, of course, will be the fallout from last Friday and the ongoing question of what will happen in Ukraine. Will there be a minerals deal? These are all just swirling in the air. So, Trump is a showman at heart. So I think a lot of this will be pomp and show and circumstance. Of course, he wants to point to what he's done, but there are questions, huge questions, swirling about what comes next.
So what's the off-ramp for the tariffs this evening?
If Trump decides that Mexico and Canada in particular have done enough on the border, then he might defer them. Secretary Bessent, of course, has talked about maybe reciprocal, that's maybe a bad word to choose because we're using another thing, matching tariffs on China that Mexico and Canada have either talked about or in some cases already done. So that's been a bit of a puzzler. He's sort of asking for stuff that's already out the door. And if they can get sort of this fortress North America type of idea into President Trump's sort of, get his buy-in on it, then maybe there's a deferral. We also don't know that these will move at the same time. Remember, a month ago, Mexico was deferred before Canada was. Trudeau and Trump had 2 calls. Trump has been very critical of Trudeau. So right now, we don't know if any one or all 3 will, again, move as one. I think this is a really important point. The way they've technically done it is by doing separate executive orders so they can pull and punt and adjust on the fly. One other quick thing to flag is last night, they tweaked the Canada and Mexico ones. It is either a signal that they plan to proceed or at least a signal that they want to be seen as threatening to plan to proceed with these tariffs. And what it did is tweak some of the rules on de minimis change, which affects parcel shipping, basically punting that until they can figure out a way to collect tariffs from either individual retailers or mom and pop shipping things across the border. Mm-hmm. And so that is if they're fine tuning, that suggests that they're at least holding open the option to go ahead with these tariffs, if not planning to do so explicitly.
I mean, in the meantime, President Trump will be speaking later on today. He hinted that there will be some economic policy rolled out. The Wall Street Journal now reporting that the TSMC is expected to announce $100 billion investment in the U.S. For chip-making facilities. You have like 20 seconds. Is this the kind of thing we can expect now at 1 o'clock?
I mean, I will defer to my friends at the Journal if they're reporting that Trump has loved to make these announcements big numbers. I will say until now, the numbers have not always withstood the full light of day when you dig into the details. So we'll be looking for those details today.
Well said, Josh. Appreciate that. Josh Wingrove, Bloomberg senior White House reporter. And Bloomberg, of course, will be bringing you that live later on this afternoon. The Journal reporting that TSMC expected to announce $100 billion in investment in the U.S.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, the other stock on the move is Kroger. That stock down over 1%. Apparently, the CEO resigns over, quote, personal conduct after a board probe. Want to get more on this with Jaewon Kang, Bloomberg Retail Reporter, joining us. Do we know, Jaewon, what this personal conduct was?
We do not. It's pretty limited, what we know right now. We know that the CEO resigned after the board conducted an investigation into his personal conduct. We know that it was a personal conduct and that the behavior did not involve the company's operations, but that it was inconsistent with their policy on business ethics. So now, Rodney McMullen, he's resigned effective immediately, and Braun Sargent, who's been on the board of the company for almost 20 years, he'll serve as interim CEO.
So how important is this CEO that did resign, Mr. McMullen? How important has he been to the story?
He's been in his role for, over a decade, and he's, led the company through really important moments, whether it's, really getting into the e-commerce business, led the company through the pandemic, the period of historic inflation that we've lived through. And most recently, he tried to merge with Albertsons in what could have been the biggest grocery deal in the U.S. in history. Of course, that did not come through after the government blocked it. But he's someone that's been at the helm for quite a while after a long tenure at the company. And is someone, that's led the company through a lot of important moments.
How's Kroger doing otherwise? If we just take that away for a second, what's it like to be in a Kroger business right now?
Yeah, so it's, the company did really well during the pandemic and inflation, like a lot of its other peers in the retail business. That growth has started to moderate, partly as people look to save money. And, as we talked about, the Albertsons deal that had been sort of an overhang on the company for the last few years as they tried to merge, and then that deal got blocked by the FTC. They had to go to court to defend it. And we know the result now, which is that it didn't, go through, but that's been, a bit of a distraction for quite a while. And on top of that, the management team is also pretty new. The CFO left last year and joined a competitor, Costco, the chief merchant, which is, of course, a really important role in the retail business. He also left at the end of last year for a different opportunity. And so we're, kind of seeing both of those factors starting to play out now as they, try to operate and navigate through a lot of macro uncertainties.
So is there another M&A trade in there for in that supermarket business? Again, you mentioned Kroger's had some success and they've had some deals blocked. Are they still in the market for growth via acquisition?
It's hard to say right now. I mean, the Albertsons deal just fell apart, a few months ago. The expectation, I think, from people who follow the company is that, Kroger could look to do other deals down the line. But I think for now, the main priority is getting back to business and pursuing, organic growth.
Thank you so much. Didn't turn on my mic there. My bad. Man, it's Monday. Jaewon, thanks a lot. Great reporting. We appreciate it. Jaewon Kang joining us, a Bloomberg Retail Reporter.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find it. It seems like, again, I was mentioning to Alix earlier that in the last few weeks we've heard from professional investors that there's growing concerns maybe about the U.S. economic growth and the exceptionalism thereof, and if so, what do you do with your investments? Christina Hooper joins us here. She is Chief Global Market Strategist for Invesco. Christina, how do you think about U.S. economic growth over the last several weeks? Has your outlook changed at all? And if so, how did you maybe change kind of the way you're looking at investment opportunities?
Well, Paul, Alix, it's great to be with you. My outlook hasn't changed much. Our expectation when we put out our 2025 outlook in November was that we're likely to see better performance from developed markets ex-US in 2025. And so that is playing out. The US has been doing so well for so long, and this seems to be a time in which we're likely to see key drivers like greater monetary policy easing and lower valuations supporting other markets. So my view is that we're likely to see some hiccups. It doesn't mean we're going to see a dramatic downturn, but we do have as a frame of reference the 2018-2019 tariff wars, which were negative for U.S. stocks. So we want to be careful there.
So does that mean, okay, we had someone else on the last hour that said buy the dip. It sounds like it's more let it play out and see what happens by stealth elsewhere.
So I think first and foremost, it's about rebalancing. Most investors are likely overweight U.S. equities and underweight European equities, UK equities, EM equities. So this is an opportunity to rebalance. U.S. stocks have had a great run over multiple years. And it's about, in doing so, in rebalancing, one is going to have an overall valuation on one's portfolio that's lower. That might be less vulnerable to some of the turmoil and uncertainty that we're seeing right now. And so essentially maintain exposure to the U.S., but this is not a time to be overweight the U.S., in my opinion.
Interesting, because I'm looking on a year-to-date basis, the S&P 500 up about 1%, but the stocks Europe 600 price index, which I think is kind of the broadest view of European investing, that's up 11% year-to-date. Do you expect that to continue, Christina?
I do think so. We have some powerful drivers. First of all, we've got, potentially significant ECB easing this year. But beyond that, what we have is low valuations, and we have economic surprise. It's positive. Sentiment has been pretty negative on European equities, and they're exceeding expectations. So I think this should be a good year for European equities. And I think it could very well be a good year for UK equities, Japanese equities, and in fact, EM equities as well.
But what about the whole tariff thing? Because that's going to hurt everybody, right? So is it just that because valuation is so much lower in Europe and the UK than the US that it can absorb that kind of hit?
Well, I think that's certainly part of the story. Also, you, of course, have those other drivers that I think can soften the blow. For example, additional easing. If we look at emerging markets, central banks, more easing was expected last year than we got. So I suspect that is what will come this year. We had to wait a little bit, but I think this is probably good timing and should be supportive of any kind of headwinds created by tariffs.
Walmart recently reported earnings, and people look to Walmart. It's just a great gauge of the U.S. consumer here. What did you see from Walmart? How do you feel about the U.S. consumer here?
So Walmart was, I think, very rational and reasonable in saying that we don't know exactly what's going to happen this year. There's an awful lot of uncertainty. And I think that's the reality, that the consumer has been quite resilient, but we don't know how things play out this year. And I think that makes sense. The U.S. consumer is coming under greater pressure. Sentiment is down significantly. And we saw on Friday that personal spending was down. We have to be concerned that there are pressures. Now, having said that, they could be very short-term in nature, since they seem to be driven largely by tariffs and the potential for tariff wars. So if this were to be behind us, it could be very similar to what we saw in 2018, 2019, where as soon as the bulk of the tariff wars are over, there is a resumption in not just improved sentiment on the part of consumers and businesses, but improved spending.
What are the most typical questions that you're getting right now from clients based on this global view that you have?
Well, are we going into a recession in the U.S.? And I think that's only been amplified by the Atlanta Fed GDP Now estimate, which has shifted from growth expectations of over 2% to now a negative growth in the first quarter. My answer is that we need to wait and see. It's unclear. Our base case certainly has not been for a recession this year. But we are seeing a deterioration in economic data. So we want to follow this very closely. Now, it could very well be that we do see growth in the first quarter. Keep in mind that the Atlanta Fed GDP now there is real time, so it can easily shift. But I do think we want to be more on top of this, more cognizant of every data point and what it might be telling us. We want to find those canaries in the coal mine right now.
Yep. And you're not alone in that. Michael Ferroli over at JP Morgan just cut his first quarter real GDP estimate from 2.25% to 1.5. So like it's moving really fast. Christina, thank you so much. Christina Hooper joining us from Invesco. Always wonderful to get your perspective.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.